Well, good afternoon, everybody, or good morning, I should say. Thanks for having us. This is going to be a very interesting discussion about what I think is the next leg in of demand coming into this space. My background, I'm sort of an accidental crypto enthusiast. My background is actually in quantitative public equity asset management. So of all the people here, I probably have the least experience maybe with this space, but have a lot of experience with understanding how institutions, family offices, pensions, et cetera, invest and the sorts of things and questions that they need to have answered in order to actually make a large allocation. We were talking last night, we were all at dinner together about the amount of fiat dollars that has actually come into this space since inception. And when you do the back of the envelope math, it's a shockingly small number. When big institutions get involved, those numbers will get much bigger. So that's going to be one of the key focuses of our discussion today. But I figured that we would start with some introductions. Maybe Ariana at the end, we'll start with you. Just a brief introduction of who you are, maybe how you came to the space, and just for something fun, the last price that you bought or procured any Bitcoin at.
Sure. Hi, my name is Ariana Simpson, and I've been in the crypto space for a few years now. I was working at Facebook at the time, and I had just actually come back from a few months traveling around Southern Africa, including some time in Zimbabwe. And so I was there right after the worst of their hyperinflation, and so I came back to the US and I was thinking a lot about what might be possible in a world in which a corrupt central government didn't control all the means of exchanging value or storing value. And I read the Bitcoin white paper and was like, oh great, I'm all in. And so that was about 5 years ago now. And so I've been investing in this space for that amount of time, and most recently was running a venture fund called Crystal Towers Capital, and just launched my second fund, which is called Autonomous Partners, and is focused on crypto assets.
How about you, Linda?
Last price. I think the last price was $2,700, but most of it was around $100 a few years back. So.
Okay, Linda, how about you?
Hi, I'm Linda Shea. I co-founded Scalar Capital. Before that, I was at Coinbase for a few years. I was doing blockchain investigations, working with law enforcement and trying to trace the Bitcoin blockchain and catch cyber criminals. And then I was also doing product management. And then left 2 months ago to start Scalar Capital. And I've been in this space for a number of years. I got really interested in Bitcoin back when I was in college in 2011. Like many people, when I saw it back then, didn't think it was legitimate because it was Silk Road, Mt. Gox at the time, but followed it for quite some time. Last time I bought Bitcoin, I was mining up until a couple months ago, so probably around 4,000.
Great, thanks, Ari.
I'm co-founder and CIO of Block Tower Capital. I've been in finance for a long time. I started my career as a trader for Susquehanna International Group, trading commodities, currencies, bonds, equity derivatives. And then more recently, I was a portfolio manager for the University of Chicago Endowment. So kind of the other side, the long-term focus on investing. I fell down the crypto rabbit hole starting in 2014, and I was a slow learner. It really took me a few years to kind of really commit to it, both financially as a career, to really see the promise and potential. And the last price on November 13th, about 2 weeks ago, when Bitcoin Cash went crazy during Korea hours, buying the dip in Bitcoin for $5,500.
Awesome. So what we'll do is sort of proceed in a funnel fashion, starting with the investor base at a very high level. All three of you now are managing outside money. This is an incredibly new and, I would argue, immature space in terms of just things like liquidity, LP understanding of the space. So I'd like to begin by asking each of you sort of the profile of your LP investors, and maybe even more interesting, why prospective LP investors that you've talked to have said no. So the people that haven't invested with you, the reasons that they've given you, if they have, for saying no, and we'll go in the reverse order. So starting with you, Ari.
Sure. So our anchor investors were some of the Sandhill VCs on the West Coast. I think part of that is their risk tolerance, so that they tend to be forward-looking. They're looking to participate in disruptive tech, and also they're used to putting together a portfolio of maybe 20 investments where they know that maybe a couple of them will be zeros. So they have a pretty high risk tolerance. And then it was high net worth individuals, and now we're starting to see some of the big family offices. I think the next wave will be endowments, but that's still probably 3 to 6 months away before they write meaningful checks.
How about you, Linda?
Yeah, our LPs so far have been pretty similar. I mean, we're based in San Francisco, so we're talking to a lot of people who are venture capitalists or high net worth individuals. Especially, we've been getting a lot of traction with people early on in the crypto space who have made a bunch of money with Bitcoin and Ether and just don't have time to keep up with all of the ICOs and things that are happening in the space. So they'd rather just allocate some of their funds to have someone else manage for them.
Ariana, we were talking last night about your background in VC and that so much of this still is technology people, fairly sophisticated investors. It's unique in the sense that it's sort of inverted from the traditional path where the Yale endowment might be the first person into a space and now they might be near the end of that line. Are you seeing anything different, kind of, let's say, outside of the traditional tech or VC investor, which seems to be really the major money that's been interested in the last 3 to 6 months? And anything you're seeing kind of on the horizon where there might be a step function into a next source of more traditional demand?
Well, I think everyone's interested. They're all asking.
Yeah.
Not everybody's ready to pull the trigger. It was amazing to me because I clearly have very boring hobbies and like to watch interviews with CIOs of top endowments in my spare time. And it's amazing to me how there'll be, even now, an hour-long interview. For example, I was watching one with David Swenson from Yale. Not a single mention of crypto, and this was a couple weeks ago. So from my perspective, people are asking questions and they want you to come in and educate them, but they're not necessarily ready to pull the trigger. So I agree with Ari. I think we're probably in 2018, I think we'll see the first one start to come in, but for now, I think most of the interest is still definitely from high net worth individuals and family offices.
Yeah. One of the things we see a lot is career risk governing a lot of what happens in any investment asset class. Ari was asked at a dinner that I was at when the University of Chicago might invest in this, and his answer was something like 6 months after Yale does. And there's this incredible kind of momentum that can be created, and maybe we're beginning to see that. It would be fun to dive into each of your specific investment processes. So the question that an institutional asset manager will get asked every single time is, what is your edge? So if someone's going to give you money, why would I give you money over just owning beta, over buying BTC and ETH and just leaving it in cold storage and not worrying about it? So Ariana, maybe we'll start with you. How would you describe your take on the 100 plus coins maybe that have enough liquidity for you to buy on your investors' behalf? What is your sort of differentiated edge or strategy?
Well, first of all, I wouldn't say there's necessarily 100 coins that have enough liquidity. I think liquidity is a huge problem, and somebody who's able to manage that is obviously a huge value add as a manager. I think a lot of what it comes down to is just understanding the space really well. I think obviously having a background in trading and traditional financial markets is helpful, but there's a lot of very specific things that pertain to this industry which don't exist or don't have parallels in other markets. So for example, is anybody actually using this network or not? Things like that, which are very important pieces that go into evaluating an investment. So I think really understanding the space is something that I spend a lot of time doing. I literally have 15 white papers in my purse right now, which is pretty typical for me. I'm not an active trader. I don't try to, capture the daily volatility or things like that, but kind of thoughtful, concentrated positions where I have, conviction about where the market's going is kind of my focus.
Well, maybe diving one step deeper on that, if you're reading those 15 white papers, what is the first pass? Like, what are the things that you need to see in order for it to get to whatever the next pile is, something that you might actually consider investing in, the markers?
Sure. Well, I think that the team is still a really big component of it, and that obviously, having a background in early stage venture, that's something that I think a lot about. Ultimately, these networks are built by people, so having a strong community and engaged user base, which can be the developer community or it can be other folks building or using the network, is really critical. So that's a big part of it. And then I think also just forming a thesis around a particular space and a given use case. So I think we may actually see a lot of networks, for example, where the network becomes widely used, but the value doesn't necessarily accrue at the token level. If token velocity is very high, you may see that the token price doesn't actually ever get to be anywhere near what you might see for Bitcoin, despite it being widely used. So I spend a lot of time thinking about.
How about you, Ari?
Like
I know your approach is quite a bit different.
Yeah, I spent a lot of time digging into catalysts. So for example, heading into the 2x hard fork, I did almost nothing else for 2 weeks and talked to all the service providers, the mining pools, the exchange operators, trying to understand. I think a key thing to understand is the listed coins right now, it's a poker game. You have a handful of key economic actors. They differ by coin, although there are a few in common. So, for example, Coinbase moves markets whenever they make any decision. And understanding their holdings, their economic incentives, how they think, how they're likely to react is critical and often gives us a really good chance at predicting what will happen. 2x was called off. We had kind of game planned that scenario. Then Bitcoin Cash. Then there's a lot of data to follow as that plays out, looking at the meme pool, looking at hash power. So for us, it's very much centered around catalysts and potential catalysts and thinking of it like a poker game, and then trying to find edge in the form of information others don't have or a deeper understanding of the market microstructure and the market players.
How about you, Linda?
So I think is this on or?
Yeah, it's on.
I think it varies by project and what stage they're at. So like for the very early stage projects, we're seeing a lot of token sales, and the first thing I always ask is whether or not they actually need a token. Are they just tacking on this to fundraise or not? Essentially that's the first question I ask, and I'm able to filter out a lot of projects through that way. And then for the coins that actually exist already, and looking at the actual network, like how many transactions per day, what's the rate it's growing at, like how much like the Google search volume's increasing by. So it really varies by the stage. And then for our edge, like we want to be really involved in the community. Like Ariana said, like the teams really matter. So for me, like I've been really involved in organizing meetups. The San Francisco Ethereum Developers Meetup, that's where I get to meet a lot of developers who are very early on in their projects. So I think that meetups are really undervalued resource. And I think if someone really wants to get on like the cutting edge of what people are building, like host some meetup in your area, and you'll meet a lot of really great developers through that.
Before we get into maybe some of the tokens that have the most potential or latent potential in them, let's talk about the downside here. So I'd love to ask each of you what you think the most compelling, like existential bear case is for the entire space. This is a really hard question. I haven't heard like a fantastic answer to it yet. So hopefully one of you three will fill the gap. Anyone can start. Maybe we'll start at the end with Ariana. Best bear case that you've come across.
I mean, the best bear case is it goes to zero. I mean, that's still a possibility for sure.
But what would cause that? What would catalyze that?
So I guess the most obvious answer would be regulation. It's just banned, but I actually think that might increase adoption. I mean, there's a lot of folks who want to be transacting for a variety of reasons, and they don't particularly care if things are banned. There's a lot of things that are banned that happen every day. So I think that would stall kind of mainstream adoption in some sense. I actually think a technical issue is more of a real threat. At this point, obviously, Bitcoin's been around for 9 years, so it's been pretty well battle tested, but I think some sort of issue on the technical side is actually more of an existential threat. And that could be, some sort of vulnerability is discovered, which hadn't previously, or it could be, a massive event of some sort, like miners colluding or things like that.
The idea of government regulation or censorship makes me think of this idea of censorship resistance. And one of the more compelling arguments I've read in favor of something like Bitcoin is that really its true value is censorship resistance. So Ari, maybe you could describe what that concept is and opine on whether or not you think that is the primary driver of a relatively inefficient blockchain's technology versus centralized solutions.
Sure. So a key idea in investing in cryptocurrency is the blockchain is a horribly inefficient database, right? You're sending the same information to nodes all around the world. It makes no sense for most use cases. There's a huge cost to that. So when is that worth it? What are you getting for that? So there's two terms that are similar but slightly different. Censorship resistant means no one can prevent you from sending that information. So if I want to send money to a politician, to WikiLeaks, I can't be stopped from sending that. And that's actually a real issue with US dollars because, for example, a bank won't allow you to wire money to many locations. And it can be hard to physically send cash and can even be illegal. So with Bitcoin, there's now a Bitcoin satellite, which is pretty incredible. So even if you don't have an internet connection, if you have a $150 satellite dish, you can send Bitcoin to anyone in the world. And the other is judgment resistance. Judgment resistance means it's very hard for a judge or government to take it from you. And that may sound like it's attractive to criminals, but so the offshore banking system is about $20 trillion. Every large US company makes use of it. So Apple, Amazon, they all use offshore banking, and all the big banks like JP Morgan facilitate that and collect fees. They're not doing it because they're criminals. They're doing it because if you're Amazon, you can't have your entire business shut down by a single judge in one legal jurisdiction pre-trial. Right? So imagine if all of Amazon's money was in New York State and a New York State judge said, we suspect you of something, we're just freezing all of your accounts, and then the next day Amazon can't make payroll. So instead, Amazon has their assets stored in every legal jurisdiction around the world, and if they end up losing that case, maybe in 5, maybe in 10 years, they'll actually get shut down, but they have their chance in court. So Bitcoin, as censorship and judgment resistant, is providing a very similar service to the offshore banking system, but providing it much, much better.
Linda, what about you? What is the existential risk that keeps you up at night, if any?
So I'm really worried about all these projects that are raising hundreds of millions of dollars and they don't actually need it. And I think a really bear case would be a situation where a project raises over $100 million. They are not motivated at all to work and they just kind of run away with the funds. And I think that at that point, regulators will definitely come in and try to protect the investors that had bought into that sale. And I think that that's going to be happening with multiple projects. And I think at that point, when you start seeing multiple projects fail, this space is, people are going to start realizing it's a bubble and the prices are going to start coming down a bit. So,
let's talk about some specific examples, maybe use a token or two to describe your process or your thinking. We talked a bit about, all three of us, privacy coins last night is something that I think you're all pretty interested in. Ariana, maybe we could start with, doesn't have to be a privacy coin, but pick a particular, let's say sufficiently liquid a coin that you might invest in that's in your investable universe for your LP investors, and describe your process for thinking through why it might be something you want to own.
Sure. Well, I think one of the more well-known coins in the privacy realm is Zcash, and I think they've done a very good job of kind of pioneering the launch of a coin and showing how they've grown that over the past year since it's been publicly traded. I think, I'm very interested in the innovation that's happening, both in Zcash and kind of more broadly in the space on the cryptography side. So, I think one of the biggest problems with Zcash to date has been the fact that you do still require a trusted setup in order to spin things up. And there's new developments being put forth now, like ZK Starks and bulletproofs, which were recently announced, which basically allow you to decrease the size of the proofs that's needed and increase efficiency and usability, but then also basically avoid the need for a trusted setup. And so I think as more of these pieces are being baked into new projects, I think that to me is one of the most interesting pieces of the ecosystem. So, it'll be interesting to see how within the privacy realm, some of these concepts are integrated into existing coins. There's proposals to put CoinJoin and Mimblewimble and other things into Bitcoin versus how much of that activity is actually ends up happening in coins that were specifically designed for privacy.
Well, Linda, one of the things I was really interested in when we were talking is the work that you did with data with Coinbase, kind of doing a ledger analysis, and maybe use your experience there to summarize what you found, and maybe highlight this idea of Bitcoin potentially really not being fungible because you can track where certain coins have been relative to something like Zcash or Monero.
Yeah, so I think there's a common misconception that Bitcoin is anonymous, and it's actually extremely traceable. It's way more traceable than cash. I mean, every single transaction that has ever happened on Bitcoin is publicly available for everyone in the world to see for the history of time. And so even if the tools don't exist now for tracing what's occurred in the past, they will be built. There's incentives for regulators and law enforcement and exchanges to build these kind of tools. And so there's already companies in this space that are built around tracing Bitcoin blockchain transactions, and that's like Chainalysis and Elliptic. And so when I was doing that work, I really saw how transparent the ledger was. Like, if anyone just publicly states their Bitcoin address, now everyone knows that that address is owned by them, and all transactions going into that address and going out of that address are forever linked to that person. And then same thing, you can see the balances. And so while this ledger can be used for catching criminals, it also alternatively can be used by bad people to target specific individuals when they they see their balances. They can, it could lead to like phishing attacks or even robbery. And then there's also just like if you're sending Bitcoin to someone else, you don't necessarily want them to be able to see all that information about you. So as I was doing that work, actually, I started realizing how important privacy was, and I started looking at coins like Monero and Zcash. And I think that one thing that is really important about these privacy coins is actually being private by default. So when you reveal information on the blockchain, even just a little bit, you start being able to trace some information. And so when I look at Monero, I really like the fact that everything's private by default. In Zcash, one of the metrics I'm constantly monitoring is how many transactions are actually shielded, and that means that these transactions are actually anonymous. And about 20% of transactions on the network are shielded, and then only 8% of the transaction volume is actually shielded. So I want to see those numbers increase over time.
Ari, maybe you could describe, a lot of people hear privacy and they immediately jump to illicit uses of privacy, black marketplaces, et cetera, as a primary use case, which in fact it may be. Maybe talk about the value beyond the illicit of privacy, and then describe whether or not you are constructive or bullish on privacy coins.
Sure. I think it's useful to juxtapose the two coins that were discussed. You have Monero and Zcash, which are both plays on privacy. I actually like both of them. And they're very different use cases. So Monero, the privacy by default, makes it much more attractive if your primary focus is privacy and that's what you care about. So Monero is more used on darknets. Monero is accepted by WikiLeaks. So some real use cases are supporting a dissident politician in much of the world where that could be a real risk, right? Whether it's Russia or China or even India. In much of the world, supporting a free speech via donation is not as easy as it is in the US. Zcash, on the other hand, that optional transparency is very valuable for enterprise solutions. So Zcash has very explicitly positioned themselves kind of as an alternative to Monero, and you have an exchange-traded note coming out that Grayscale's putting out for Zcash that would be impossible for Monero. Because to have an ETN, you need to have the transactions going into that ETN to be traceable to meet various regulations. And JP Morgan, famously partnered at the Consensus event here in May. Zuko announced on stage a partnership with JP Morgan to integrate ZK Snark technology to provide privacy to banking clients. Whether that actually gets implemented, I don't know, but the idea of private transactions is not just for illicit. There's an element that every bank wants to incorporate for their users, right? Private wealth clients of banks want privacy.
I'm curious if each of you could short a coin, what you would pick and why.
I would short BitConnect. Yeah.
Can you describe why?
I don't want to I think it's a Ponzi scheme. If you go on the website, you can clearly see some of the returns they're touting and what they're trying to market.
It is literally a Ponzi scheme. The way they describe it, it's a Ponzi scheme, so you're quite safe saying that.
How about you, Ari? What would you short? Or Ariana?
Sorry,
go ahead.
two Aris, it's confusing. I wouldn't short anything right now because there's a lot of, but that doesn't mean I don't think there's a lot of projects which have no value. Believe me, I do. But there's a lot of irrational activity right now, and I just don't see the need to short anything. And you may be 100% right, but somebody's buying mysteriously. And so I don't want to take the other side of that trade.
Scary.
Yeah, you don't make money shorting things that are overvalued, because if something's overvalued, it can become more overvalued, right? If you think an asset is 10x overvalued, what prevents it from being 20x or 30x or 40x overvalued? You make money generally shorting things that are going down, that have been abandoned. Trying to short tops is kind of the easiest way to get destroyed. So I think something for, you have a lot of new funds launching with people who are very talented on the engineering side. They're very smart, maybe they have VC background, but they've never been in the trading spot. They've never shorted anything before, and there's some hard lessons you have to learn. You need to have a lot of respect for shorts, because if something can be overvalued, it can be much, much more overvalued.
Let's get back to the LP base, right? So you mentioned family offices. Maybe you've got a couple family office investors. There's endowments, there's pensions. There's a massive wash of capital that might come into this space in the next year or two. What would be your best argument for, let's say it's a mid-level university endowment, and their mandate is a 7% annualized rate of return for their beneficiaries, and they own no crypto, and they're sort of approaching the space for the first time. One of the counter arguments I've heard is from a venture capitalist here in New York named Jordan Cooper, who basically said, I'm super interested in this technology in this space, but it feels like I have to pay the equivalent of $50 million seed caps for projects that I normally would pay $3 to $5 million for. And so the price has just run ahead of me and I need to wait for better prices. What would be your sort of counter argument to that to try to convince a more traditional, we'll call it more risk averse, structured investor like a university endowment to invest in the space? Maybe Linda, we'll start with you on this one.
Yeah, I mean, I definitely, I haven't had as much conversations around those kind of investors, but generally I try to just sell them on the idea of why Bitcoin is important and why this technology is not going away anytime soon. I've actually been using Ari's example a lot of the banking offshore system and explaining to why that actually is going to be a use case. Like you essentially have this idea of unseizable money, and that really seems to sell well with a lot of the more institutional investors. And so like it's always worth having some exposure to this kind of system. I haven't talked to endowments as much, so I don't really know that conversation.
All right, I know you came from one, so maybe you could give us your best case for why an entity like that might get involved.
Sure, it's something that actually frustrates me a lot. So I'm very, very open about the risks of the space, the operational risk, the security risk, the hypervolatility, the regulatory risk. But kind of a really, really core concept in finance and in portfolio management that everyone at endowment had to learn 5 times over is the idea that you don't care about the risk of an asset or a stock. If I invest in the S&P 500, I don't care that one of those stocks is a coin flip and it's either going to be 100% up or a zero if it's, say, a biotech that is waiting on FDA approval. You don't care about that because it's 0.5% of your portfolio. That risk is called idiosyncratic risk and it gets diversified away. So what I get frustrated about is when I talk to these people who know this, they've taken those MBA classes, they've gotten their CFA, and they say something like, yeah, it's too risky, it's so volatile. And my answer is always, well, it actually decreases the risk of the portfolio. If you put 1% of an endowment in cryptocurrency, it actually reduces the risk because it's uncorrelated to the rest of the portfolio. And so the risk, that volatility, gets diversified away. And the risks other than volatility, things like operational risk, those are the risks you want to get paid for. Because normally as an endowment, you're getting paid to take beta risk and duration and illiquidity. The opportunity to get paid to take an uncorrelated risk is fantastic because it's a tiny, tiny percentage of your portfolio that gets diversified away. So I try to explain that to them and say, this is not about, don't look at this in isolation. Don't look at cryptocurrency as, is this risky or not? Look at it as a 1% addition to your portfolio and say, is my entire portfolio meaningfully more risky or not? And the answer is it's not.
How do you square that with, let's say, a more traditional, Ariana, you ran a more traditional venture capital style fund, which I think dabbled or had some crypto exposure. Now your fund number 2 is pure crypto. So that kind of profile that Ari's talking about, the reason why endowments and other big institutions have allocations to venture capital is that diversifying kind of potential return stream. Why not put it like you did in Fund 1 and have it just be one of the things that you can consider as a venture fund versus its own asset class? Why is this a distinct asset class?
Well, I think there's so much going on in the space that I could not in good faith say, oh, I'm doing crypto and then I'm also doing other venture because, I was doing a lot of investing in the autonomous vehicle space. There's a ton of stuff going on there. There's so much happening in crypto. It's just, I think, too much activity to follow that well in addition to doing everything else. So I think it's a case where specialization is important. And obviously I've also been interested in this space for a number of years, so it just felt like timing was right to focus on it again. But just to add something to the previous question about how do you explain this to managers. I think you also, I agree with everything that Linda and Ari said, but I would also add that you also have to look at what are your other investment opportunities. And you look at venture capital, the average time to IPO has gone from 4 years in 2000 to over 11 years now. So these lock-up liquidity periods are getting longer and longer. There's been the creation of infinity seed funds in the last couple of years. So prices are going higher and higher. There's more competition to get into a relatively small number of good deals. If you look at public equities, we're seeing like new highs like every day. So, I think finding situations in which you can really locate meaningful upside is not super easy these days. And I think crypto is a very, very interesting space also for that reason.
One of my favorite kind of memes in the venture capital world is that to make any money, you need to be non-consensus and right. So that's how I would think about alpha, right? Like there's the beta, just the market in crypto has delivered insane returns, but it also seems like an interesting area with lots of inefficiencies where alpha is possible, doing better than a cap-weighted version of the entire space. So with that in mind, we'll close with this question for each person, which is, what project or token has you most kind of generally interested and excited kind of looking out over the next year? We'll start with you, Linda.
Yeah, so disclaimer, I'm an advisor to this project, but I care very much. So, 0x is a protocol for decentralized exchange of Ethereum tokens. And having worked at a centralized exchange, I know some of the struggles with not being able to onboard customers because they live in certain regions or because their identity verification didn't work. And so it's really important to be able to give access to exchanges to people that aren't able to access centralized exchanges. And there's a handful of centralized exchanges, or there's many centralized exchanges that I just don't even trust to store my funds with. So I like that you're removing the custody aspect with these centralized exchanges. And 0x has this whole developer ecosystem building on top of it right now. There's Radar Relay, which is already live on mainnet, and people are able to trade ERC20 tokens. There's also Paradex that's coming out soon. There's DYDX for derivatives, and there's DARM for debt tokens. So it has a really strong ecosystem around it, and they haven't been focused on marketing, being able to just really focus on attracting developers.
How about you, Ari?
It's not so much any particular project as the dynamic around Bitcoin and all of its forks. And for some of them, like Bitcoin Gold, it uses a different work mechanism, GPU mining. But many of them are still using SHA-256. And that produces really, really complex, fascinating game theory that produces a lot of complexity, a lot of vicious and virtuous cycles, and I hope continues to produce a lot of opportunities for us as more active traders.
Ariana?
I'm really excited about Lightning Network, which is one of the solutions to the scalability issue. The Lightning Network is now live on Litecoin, and they just launched cross-chain atomic swaps a week and a half ago, which is pretty exciting. And I think obviously scalability is one of the main challenges that the ecosystem is going to have to address in the next couple of years. And Lightning is literally months away from potentially being live on Bitcoin. So I'm very excited about that.
So we've got a couple extra minutes, and one of the things I've loved about this space is how willing people are to share and help others get educated. So maybe it would be fun, and I can kick us off, to suggest some resources, whether it's reading or places that you go to learn more about the space. So one of the funny things is that it just moves too fast for books. There's a great book by Chris Berniski, who I saw backstage earlier, called Crypto Assets, which just came out. But the funny thing about it is you read in the introduction, and like the total network value that he references is like $20 billion or something. And this book just came out. So just like the publishing lead time is a problem. So that's one great book, Crypto Assets. There's another one coming out in February called the Bitcoin Standard, which is really, really good. At least the early draft was really good. So I'm curious what kind of one or two suggested resources, could be a white paper, could be anything really, that you would leave everyone with as a great way to keep learning.
I really like Twitter. There's a lot of trolls, admittedly, but I think there's a lot of very smart crypto people who are very active on Twitter. And so it's a great kind of aggregator. If you follow people in that space, it's a great aggregator of what's happening in the development of various projects, what new white papers are released. So it's kind of a cop-out answer because it summarizes all of those pieces, but I find it to be actually very useful rather than just a waste of time.
My two favorite newsletters are Week in Ethereum News by Evan Van Ness. It does a really great job of aggregating all of the Ethereum development that's happening. There's just so much going on all the time, and so on a weekly basis I can just see some of the highlights. And then Token Economy, which is a really great newsletter that goes in detail on some projects and talks about a lot of the upcoming projects and just some of the major themes that are happening in the space. So I highly recommend subscribing to both of them.
So those were great for kind of contemporaneous news. For a deeper dive, Patrick's too modest to bring up Hash Power, which is Patrick's amazing podcast series that has 250,000 listeners, pretty much a who's who in kind of the industry. And then I'd recommend, for the more technical side, but not too technical, Jimmy Song has awesome content, Medium essays, a YouTube video. He's a core developer. And then for kind of a little bit broader level, Lou Kerner has been doing conferences with kind of thought leaders in the space. So if you Google Lou Kerner, he has Medium pieces and some conference calls that are, I think, valuable.
Well, thanks, guys. The next year is going to be insane one way or the other in this space, no doubt, as more and more mainstream investors get involved. So I appreciate everyone's perspective. Thanks very much.